Hello and welcome to Blockchain Gaming World with me, Jon Jordan. So this is going to be a interesting video. Stick with it. This is going to be my overview of how blockchain is going to change the games industry, and I'm going to do that by spending a bit of time looking at the games industry, the kind of two main cycles it's gone through. So I think blockchain will be the third big cycle in terms of business case, at least. So I'm going to start drawing. I'm going to do some very basic economics. Don't be scared. So I'm going to say this is games pre 2010. Let's say. So I'm going to this is going to be a broad brush approach, but this is what I'm going to do. So before 2010, what did the games industry look like in terms of business? Or in terms of kind of product, I suppose. Let's make that a bit neater. Okay, so I'm going to be drawing some graphs. I love graphs. So on the vertical scale, we're going to have money, and this is the money generated per player. And on the horizontal scale, we're going to have number of players. Okay, so it's going to be a fairly traditional supply curve that we're going to look at. And games pre 2010. This is I'm taking this as meaning these are premium games that are going to be bought in stores. So I know that's not 100% the case, but certainly in the West, the vast majority of games at this stage, PC and console games, were bought on physical media, so a CD or a DVD from a shop. And this constrained the market in certain ways. So the kind of most obvious constraint is there's kind of a maximum price. So let's say maximum price is really going to be $100 for a game. We did start to see during this stage people selling these kind of premium boxes, these special edition boxes where you got a special edition of the game in a metal box with a T-shirt and all these manner of kind of weird branded items to try and force the price up, and that worked to some degree for your super fans were happy to buy those, and maybe people bought two and put one on eBay or something. So there was a certain there was some maximum price. Maybe it was $100, maybe it was some of them were like $300 or something. But there was some basically maximum price that people would pay, and there was a pretty small number of people. So small number of people who would buy that, and at a high level there wasn't anyone who would spend more. So basically you've got like a line there, and then you had the kind of the traditional release of the game. For want of for simplicity, let's call that $50. It's not very good 50, but it doesn't really matter. So you had your $50 release, and you had this many people would buy that. So let's call that X1 a small amount, X2 kind of a large amount. So we've got something like this, so what we could do is we could say so that number of people bought. Oh, doesn't quite join up. And this amount of people bought at. So that many people bought $100, and this amount of people bought $50. Okay, so how much money does the developer get? That's what the developer cares about, or the developer, or publisher, whatever. So to begin with, they sell, say, a few hundred. Oh, that's the wrong one. They sell a few 100,000 at this price. So this is this box here. The area of this box is however many 10,000 people bought it at that level, and then. Later on you got the big release, and then you sold to another, or it would have been happening at the same time, but you sold at $50, you sold to this many people. So that was the amount of money the developer got, or in this case the developer and the publisher and the retailer and all, whatever who was involved in the so that's how much money they got. And then if your game was super successful, you might do you might do like a $30 release. And obviously you're going to sell more, so you might get something like this. So that's the you know, you can expand your market because you've sold more, because you've dropped the price, something like this. So I mean, this is kind of, I'm constructing the standard supply curve here. What was interesting for this, certainly physical, was you'd have like we call it dollar min. So that there was some price that you couldn't go lower than, because you were having to make you know, DVDs or CDs. So you could never sell it at like $1, because you know, you couldn't manufacture them at that level. So there was some sort of audience. You could never keep making it smaller and smaller and finding your addressable audience. So basically, you ended up with a line that was constructed like this. Could be a line or could be a curve. In this case, it's just 3 points, so we'll just do it as a line. So you end up with something like this. And what you got was you sold to a smaller amount of people at $100. You sold to a much larger number of people at $50, and then you sold to another expanded number of people as a kind of like a, you know, probably like a holiday Christmas gift at $30, and you basically, that was your curve, and that was how much money you made. And that was all well and good. Everyone was happy with that. But you could never. It was very hard to get to sell to more people than this level here. You know, you could do a lot of marketing. And try and kind of like change the angle of this curve. If you did, you could do something. You know, marketing could change that angle, so you could address more people. But you'd basically always hit a spot that you could never sell it for the minimum. You could never go beyond the minimum. So you know, this was pretty successful. This was probably doing maybe $40 to $50 billion of annual revenue. So yeah, this is where the games industry was in pre-2010, and everyone was used to this. And this money, this all went to the developer and the publisher and the retailer. So obviously there was some subscription revenue in here as well. So you could potentially, with like World of Warcraft, go a bit higher. If people were spending whatever $20 a month, then that could be. Yeah, you did have those kind of edge cases, but they were still pretty limited. And over time, people would kind of churn out and stuff. But this is basically, for want of this argument, this is basically kind of where we were at in pre-2010. Okay, so what comes next? So now we're going to go games between 2010 and 2020. And the big change here is the industry goes free to play, mainly on mobile. So free to play had been around before 2010, particularly in places like Korea and China on PC. But this is where the big kind of free to play explosion happened. So let's see what that looks like. Obviously similar graph. So we've got number of players and amount of money per player. So obviously there's going to be a big change here. So let's put in what we had before. So normally we had $100 worth as a max value, and we didn't really say the number of kind of players, but I guess we were probably talking in terms of an individual game. I think some of the Nintendo stuff probably, you know, a maximum you've got like 20 million or something like that. So basically we have our graph that's sort of, if we assume there's some sort of minimum here, we've basically got our graph that sort of goes like that. And that was our graph for premium games. So what happens now, choose, what colour should we go for? Okay. So free to play, the big thing that's going on here is clearly basically we're expanding with free to play. We're expanding up here because you can spend, you know, $100 to spend in a free to play game is nothing surprising. Even I've spent $100 in a free to play game, and to 20 million players is also pretty small now. So in terms of the number of players, you know, we're probably an off-quoted figure is about 2 billion people play mobile games. So obviously, you know, there's 7 billion people on the planet. Probably, I don't know, 3 or 4, certainly probably 3 billion of them have some sort of mobile device. Quite when you get to these numbers, how people estimate this stuff doesn't really matter. You've got basically 2 billion people. There are games that have been downloaded 1 billion times. So that's in the order. So we can see we've gone from 20 million to 2 billion. So that's 2 orders of magnitude, if my maths is correct, which sometimes it is. So that's interesting. Obviously, what's happened on the money, on the other thing that's happened is because we've gone digital, there is no minimum spend now, and because we're free to play, we don't want to try and we're using the fact these are free to get as many people as possible. So there's no minimum anymore, and potentially some of our games could, some mobile games could reach 2 billion people. Now, obviously, they're not going to spend any money, or you may be able to advertise to monetize them with ads or something like that. But effectively, we can say that you're not making any money from those. But there's a much larger audience. You can make money from more than 20 million players. Even if 95%, even if 99% aren't spending money in the game, you've still got a much bigger audience who are paying you something. They're not paying you $100. But at the top end, we have a very tiny amount of people. There are games now, or not now, but kind of happened in kind of 2012, 2013, 2014, that kind of period of time, where suddenly you had games where people could spend $100,000 in a game. Now, in a sense, you could spend as much as you like. Those games are not kind of hard capped in terms of how much money you can put in. But there's no point putting, after a certain amount of time, there's not much point putting more money in because you can't buy any more stuff. But some of these economies, there was a big shift where you went from the maximum you could kind of I can say sensibly spend, but that's not the right word. But if you're a real whale player, if you're a millionaire, you could spend $10,000 in a game and feel like you were getting all the good stuff, or even $100,000. Beyond that point, there's only so many gems or only so many things you can have in the game. So that's kind of the limit. But we can see here we've gone. This is not to scale. $100 compared to $100,000. That's a multiple of order of magnitude 3. So we can kind of see at the extremes we've gone from, it's actually kind of order of magnitude 2 here, and here we've gone from order of magnitude 3. So there's a massive expansion of what's going on here. Even if at these extremes, it's a very small number of people who are going to spend $100,000 in your game. I mean, tiny. We could effectively say it's zero. It's not quite zero. So that's the expansion that happens, and the other interesting thing is because it's digital and because people are choosing to pay, we're not setting prices for them. Basically, you're addressing every player who wants to spend a certain amount. And you're addressing that kind of perfectly. So if we go back here, there were these kind of gaps here, and these were this was inefficiency in the market. So we couldn't find because you couldn't set prices at 90, at 80. You couldn't set all these prices because it's just confusing for people. So basically, this amount of kind of revenue here was from a business point of view, they say left on the table. You couldn't extract that revenue from the player base. In this scenario, you can because I can spend $1. I can spend $2, I can spend $3, I can spend $4. So basically, we do really end up, in this case, we do end up with a curve. It won't kind of really be to scale because it's kind of hard to judge. I'm doing it by freehand. But you basically have a very, the curve might be something like this. So you have these. Let's try and kind of show what I mean. So in the previous example, I mean, even if we assume you could perfectly extract this money, we have this kind of. That's the amount of money you can extract. With free to play, it's a bit different. You have this very long tail that you can get, very large numbers of people you can extract like $1 from or something under this minimum value, and then you have a very small number of people who you can extract tons and tons of value from. And obviously, what happens on the free to play mobile space? What happened was, you basically got all this for free. You got all this scale for free, because Android in particular just got you to 2 billion without you doing anything. You just put your game on the Google Play Store, and you basically, you might have to do some, kind kind of localization and work with publishers in China or something. But you basically got that effectively for free. And then effectively, you actually got this for free as well. Certainly for some game types, you had a very detailed economy. People worked out very quickly how to do that, and actually, you were generating, particularly here, if you could increase this number of people here by 10%, you were making tons more money because they were just prepared to spend a lot. We saw this kind of like 4x games, in particular 4x games. They were happy to spend tens, probably they were spending probably $100, $50 per person to acquire because they just knew they could make tons of money out of them. So free to play probably now is, depending on who you believe, it's probably now $50 to $70 billion a year. So free to play mobile, lots of people don't like it still, but it is the biggest single part of gaming. So gaming is now about 150, 160 billion a year. And free-to-play mobile is the biggest part of that. And if you took free-to-play mobile out, then the games industry wouldn't have really grown over the last 10 years. So the games industry got more profitable because digital downloads means you're not giving 50% margin to GameStop and other retailers. So the big companies have done well in terms of profitability because they've been able to extract more profit to themselves. But in terms of overall sales, not really gone up very much. Where it has gone up is here. And that's like Supercell and King and those Tencent, NetEase, those kind of companies are the ones who've got all this value, which is why EA's mobile strategy is pretty much a failure. Activision had to buy King, so these companies from the previous example didn't do very well. They didn't get free to play mobile games until it was too late, and then they had to spend billions of dollars buying these companies. So that's kind of where we are at the moment, and obviously what we're going to look at next is what's going on, or how I think blockchain is going to change this. So moving on to our third graph. So this is games post 2020. Obviously the same kind of setup. So number of players and amount of money per player. Now this is going to be different, certainly in terms of the money per player and where that goes. But we'll deal with that as it kind of comes. So the first thing to say is we've basically got our addressable market is 2 billion. That's where mobile free to play took us. Blockchain games is not going to increase that. Blockchain is not making the games industry more accessible. That is where the games industry is now. If you're free to play, there's no reason that blockchain games can't be free to play. At the moment, there are some issues around that and the kind of the way that the protocols that they run on work. But in future, and this is like as I say, we've been looking at these in broad terms over a decade, over a 10-year period. There's no reason why blockchain games can't have the same kind of widespread adoption as mobile games. Obviously, there are already mobile blockchain games. And so I think certainly as some of the kind of the things that blockchain enables, particularly in terms of how value and in terms of like advertising value, in particular how that gets kind of recycled into a game economy, how blockchains that allow for this much more granular kind of micropayments and transactional flows. I think that'll be that's not going to be an obstacle in the long term to a lot of people playing blockchain games, because blockchain really is just a technology underpinning the way games work. It's not in the long term affecting that. So what do we have? I can't remember. We had like 20 million as our kind of premium thing. So let's kind of recreate our graph. So we had some sort of minimum here, and we had something up to about 100, wasn't it? Okay, so that was where we had for premium games, and then we had free-to-play mobile games going up to what we had. Let's take that. So let's put instead. So we had like 10k or even 100k. So that was kind of where we kind of thought free-to-play mobile games were sitting. So we had something like this. I think, yeah, let's just try and draw this. So we had something, put it under there, and like that. So kind of thin tails. So that's kind of what we had before. So where do we think that blockchain games are going to sit? As I say, blockchain games are different in the sense the disruption that's coming is different to premium to free to play, where you're kind of allowing everyone to choose their price. And while I say, you know, I don't think blockchain games aren't going to in the long term be less accessible than any other game, because you can make premium blockchain games to a degree. But the big change that's going to happen is around the amount of money that players can spend. And the big thing here for blockchain, and it's not just for blockchain games, but blockchain in general, is you have a transactional system. So transactional system just means that, you know, what a blockchain does is it records transactions. It records changes of value between different addresses on the blockchain. And there could be all manner of things. It could be payment systems, could be any transfer of values. You don't have to worry about why that's the case. But for games, clearly, it could be a payment system, and could be particularly about people putting game items on a blockchain and then having access to them. So if what happened with free-to-play mobile was basically this kind of, we could say it had a limit of $100,000 per person. Obviously, that was kind of limited by the amount of money an individual had. So, most of us, even if we wanted to, couldn't spend $100,000 on a game. You know, the only time we spend $100,000 is to buy a house, and we get a loan from the bank to do that, and we pay it back over 25 years. So clearly, you know, that is going to be the case for blockchain as well. But suddenly, I think now we're seeing, this is a sort of a fictional ceiling, but probably again we could say it won't be uncommon for people to spend, you know, $1 million on an in-game item. So we've already seen single in-game items. So Axie Infinity, there's been some for 80. There was the F1 game, F1 Delta Time game, where they sold for, I think it was $110,000. So these are single NFTs that are being purchased. And transactional value is interesting, because in the case, say, you know, I spent $100 in Clash of Clans, and that money went straight to Supercell. You know, I enjoyed playing the game, but then I didn't then think it was worth spending another $100. So the money in these previous systems kind of flows out of the industry. It flows out of the industry, so it goes to the developer or the publisher or the retailer or whoever, and then, you know, is spent on salaries and profits and that sort of thing. With blockchain, obviously, what's happening here is it's transactional. So the person who spent $100,000 on the F1 Delta Time game, because that was minted by the developer got that money. But the Axie, these Axies that were selling to them sold for $80,000. They were bought. They were bought from one player to another player. So this is like a peer-to-peer network. So that money, $80,000 here, you know, the developer got 5% because it happened on their marketplace. So this is very different. So obviously, what I'm going to say here is, blockchain takes the best of the free-to-play system, in the sense that users are choosing how much they want to spend, and you can find users at every single price point. So some users of a pure free-to-play blockchain game may not spend any money at all. So probably to begin with, we're down here, less than $1 billion, but in the end will be like $2 billion. But at the top end, it's very similar to, in the sense of free-to-play, that there's it'd be a very small number of people, obviously, a smaller number of people who can spend $1 million on a single NFT. But the reason that's kind of happening there is they immediately can have the opportunity to sell it. Maybe they can't sell it for $1 million, maybe they have to drop the price, sort of thing. But you end up now with a larger number, I should say, than the people who spend $100,000 in a free-to-play game and not get anything back from it is pretty small. The amount of people who spend $100,000 in a game because they can then sell it on is much bigger. You know, if you think that the number of people who buy a house will obviously buy a house to live in, but also people can buy a second house as an investment. So suddenly you've got, you know, potentially. I mean, I don't think the case for free-to-play games that everyone who buys a second house is going to be buying Axie Infinity NFTs, but potentially you've got millions of people here. So potentially you have a much fatter curve here. It might decrease quite quickly down here. But in time, you might end up with this kind of quite kind of fat curve. That's what I think. So previously, I'm probably messing up the colours now. So previously we had here, this was the people playing premium games. The amount of money extracted was about, say, $40-50 billion a year. And then with free to play, you have this kind of extra added in, and that was about the same, $50-60 billion. When it comes to blockchain, you know, there are definitely people who are in some ways more ambitious than me, who've been quoting 100 billion a year. I think so my prediction would be by 2030, I think we'd be closer to $1 trillion. So, but what's interesting here is this is transactional. So this is not game developers are not going to go from a $160 billion industry to a $1 trillion industry and just go, wow, we're getting, you know, our enormous market's gone up 5 times already. We're just going to be rolling in the dough. No, the reason that this is going to happen, if it happens, is because developers are going to incentivize players, and what we're doing here is we're fattening out this curve here. So previously people were prepared to spend money and not get anything back from it. Now we're going to have people who are going to love playing these games, and they're also going to realise, you know, it's not an investment. Well, maybe I can say it's not an investment like buying Tesla stock, but to a degree it kind of becomes a bit like that. And for old kind of fogies who bought, you know, IBM stock and kept it for 30 years, then that's going to seem like a very odd thing. But for kind of younger generations who use Robinhood and buy Tesla stock and buy Apple stock, and when it goes up they just sell it straight away because there's very little friction in the system. This kind of thing, certainly kind of NFTs and even kind of some of the currency models around blockchain games, is going to feel very natural to them. And they're obviously they're not going to spend $1,000 to begin with, but they might spend $50, and then if they realise it might be worth $100, or maybe they lose $10 and they can sell it for $40. This kind of transactional ability is going to fatten up that curve, and over time, you know, how fat it's going to be, who knows? But I kind of think this is where we're going to see the big growth. So we're going to see this curve moving out here, and then suddenly, you know, blockchain is going to. I mean, again, this is not in scale. I should point out, but we can kind of see what's happening. We you know, free to play mobile games really stretched the number of people who could play, and then blockchain is going to stretch out, is going to over time is going to flow into that system, because people now understand how to play games. But particularly in the Western markets, in the developed markets, what you're going to see is in the first kind of 5 years of this, I think, is this fattening out of people who are prepared to spend money, you know, in the hope that they get it back, or maybe not even the hope, but even in the realization that if they really wanted to, they could. There's lots of problems around this. I mean, this is a very broad brush approach that I'm presenting here. Developers will have to understand how to deal with this, and in a sense, their success in that case will define how kind of fat this line is. Maybe it's thinner, but fundamentally, you know, the amount of people who will spend $100 in a free-to-play mobile game compared to people who spend $100 in something that they think that might be worth $200, or they can get $90 back on, is much bigger. You know, I mean, that is just a fundamental fact. So for me, that's the concept of why we're going to end up with a you know, $1 trillion is clearly just a number that sounds big. So probably somewhere, you know, between 100 billion and a trillion. But remember, this is transactional. So if we assume the developer gets 5% of any sale, so in the case of $100 billion, so the developers of blockchain games will only generate $5 billion themselves. That will be what their take is if the blockchain game space was worth was worth 100 billion. So that's pretty small. That's a year. that's pretty small compared to free-to-play mobile and premium games now, say 50 billion each. So you can see why traditional games companies are not seeing this as a massive win at the moment, because it's very disruptive and it's not, if it's $100 billion of transactional value. And the interesting thing, actually, I should say, is if that is the case, then 95 billion a year goes into the P2P market. So you can kind of see how fat this curve suddenly gets. That suddenly now you've got a market where players are generating $95 billion a year. This percentage is probably a little bit low because developers will be minting new objects. So, but you can kind of see how it pans out. And certainly, if we get to $1 trillion, then developers are getting 20 billion a year. So still down on what they're doing at the moment. It's 100. This number becomes ridiculous. $180 billion goes between players of games. So maybe that number is too big. Maybe we should stick with this number for the time being. But I hope this kind of idea just gets you thinking about why I think and people in the industry think blockchain games are interesting. We won't call them blockchain games, but why we think blockchain is interesting for the game space. It's disruptive for developers because their take is suddenly now much smaller. Maybe 5%, maybe 10%, who knows? But they're not getting the money now. The money's now going to players. But equally, that's why you're going to get this much fatter curve here, because players are suddenly going, oh, right, so I'm part of this game economy. I can use referral codes and get my friends to play with me. I can trade amongst ourselves. Is that whole thing. People trading Pokemon cards, which they could do, but it was physical. It didn't have any network effects. It wasn't global. And then suddenly we've got people, if you get anything close to this, $95 billion, even had this begin with $1 billion of transactional value, then this is going to grow very, very quickly, and there's going to be horrible bubbles and all that kind of stuff, and probably a lot of regulation around it. But this is what I think is happening, and I think it's not just for about games. I think blockchain is going to do this for everything. So blockchain is going to do this, for the internet. So if you watch an advert, you'll get a small amount of tokens. You can then spend those tokens on the internet, doing whatever you want. You can then spend those. You can have tokens. That means you don't watch any adverts because you've got tokens in your wallet, or you're spending tokens not to watch adverts. All this kind of stuff's going to get transactional. Is that good or bad? I mean, that's a moral issue. That's another video. I don't think that matters. I mean, it does matter. I don't think that matters in this case. I think it's going to happen. That's just how the new economy is going to be working. And that's going to have some good things, going to have some bad things. Probably generally it's going to make people a bit more aware of what's going on than is currently the case, certainly on the internet. So that's probably a good thing. But there'll definitely be winners and losers. But the game space, I think, will be fascinating because the game space is good at creating very sticky communities, and those communities up to this date have not been very well they've not gained a cut of the success. They've got that through playing the games, and they've enjoyed playing the games, but now there's a financial aspect of that. I think we're going to see gaming as a concept grow much wider, and I think that's going to be, well, like I say, I think it's going to be a good thing. I think it's going to be an exciting thing. The traditionalists who didn't like free to play are not going to like this, probably, until they make some money out of it. Then they'll probably decide that they do like it. But it's going to be different sorts of games. Certainly, that's the case. Obviously, premium games will always be there. Free to play mobile games. Some of these casual ones that don't have blockchain in there will probably be in there as well, because blockchain is confusing for people. There is an educational process you have to get. You have to teach people what this kind of stuff means. But actually, it's not that bad. People understand. There is digital money now, and that's certainly how the world economy is moving towards digital money. And the fact it's something running on a blockchain, will become irrelevant over time. So anyway, I hope that was useful, and not just squiggles. I do think there is obviously much deeper analysis to be done over these things, and probably draw some of these graphs up with like proper numbers and try and draw the shapes of these things a bit better. But this was just like a conceptual idea. I do think about this kind of stuff a lot, and I do think it helps. I think it does help me to understand it, and hopefully that means it helps other people to understand it as well. Hope you enjoy the channel. This is Blockchain Gaming World, where we think about these things, and try and do videos, hopefully, that other people like as well. But thanks for watching. If you like this stuff, please do subscribe. If you have any comments, please stick them in the comments box. I'll try my best to explain them. But thanks for watching, and hope to see you again soon.